So, Lucy, we have Inditex first quarter numbers today. This is meant to be one of the great growth stories in the fashion world, but profits are falling. What's going on?
Well, the majority of the market is responding to this with one word, and that's currencies. The company has seen currency pressure from various emerging markets, particularly which are, ironically enough, the growth areas. Another impact that has hit them as well has been the base effect from the previous year. They had a very strong first quarter last year, and so that obviously has meant that the comparisons make growth quite difficult.
But is there any underlying problem with the story at Inditex? The currencies you might brush off and say, well, that's just a translation effect at group level, and the comparison effect, well, you say, well, last year was very strong, so this year is not quite so strong. Is there anything more worrying beneath that?
It's really hard to find anything to fault the company on, actually. They have a phenomenal growth model. They're incredibly responsive to the market. They have very rapid turnaround from sketch to shelf in 2 weeks is an oft repeated phrase. And it's a pull model, so that when somebody goes into a shop, when multiple customers go into shops and they like something, then more of that can arrive on the shelves fairly rapidly because the managers are reporting back to a centralised distribution location, and that centralised distribution location in Spain, which has a high base cost, means that they can actually dispatch product very rapidly from one location in response to customer demand. And that kind of rapid response to market is pretty exceptional, and also based on the fact that a third of their manufacturing is done in-house. So they have that marginal flexibility on the manufacturing, which is very hard for other retailers to match.
It's operationally very strong, and that's great news for customers. It's not necessarily great news for shareholders or for investors that are looking at the share price over the past couple of years. It's kind of bounced around between 100 and 120 euros. It's not a very strong performance.
That's true. It has actually been quite lackluster relative to the market. I would suggest that, again, it's been 2013 numbers were pretty disappointing, again because of the currency effect, and there may be some concerns about whether or not the company can continue to deliver its growth in the long run. But in most of its markets, it's present in 88 markets, in most of its markets it has something around a 1% market share. It's not a number that the company discloses, but the majority of market analysts seem to have worked out something similar. And you would think from 1% market share there would be quite a lot of room for them to grow. So I think the market is assuming that 10% annual growth can persist. Of course, last year we didn't see that, and I suspect that that's one of the very major reasons why the share price has been a fairly moribund performer relative to the rest of the market.
So potentially still plenty of room to grow for Inditex, but as ASOS discovered last week, that potential doesn't always turn into reality, and problems can come up along the way. Lucy, thanks very much.